Welcome to the Stage Analysis Weekend video. It's Sunday the 23rd of October 2022. I'm going to start tonight's video by going through some of the watchlist stocks from after midweek. So last video I did was on Wednesday. So I want to cover the watchlist stocks from Thursday first, and then some of the weekend stocks, and then get into the market breadth, the indexes, all that good stuff, industry groups, etc., and have a look at what's been going on in the market, as we had obviously one of the IBD follow through days on Friday. So something I've been looking at over the weekend, doing some breadth comparisons when the follow through days occur. So I wanted to cover a little bit on that and try to start a study on that a bit deeper, as it brought up some interesting results. So starting off tonight, looking at the Thursday's watch list. So got a bunch of earnings going on this week. It's a big week for earnings. We've got major mega caps reporting this week. So Tuesday, Wednesday, Thursday, I believe we've got Apple, we've got Google, Apple, Microsoft, Amazon, and maybe one more, Meta as well. So I think we've got 5 of the mega caps reporting this week at least, and a bunch of others. I think by the end of the week we will have seen around a third of the Nasdaq 100 will have reported since the earnings season started, and by the end of next week I think it worked out it was around 2/3 of the Nasdaq 100 stocks, and obviously by proxy the broader market will have reported. So should have a much better idea of what's going on in the market by then. I'm looking for obviously how these stocks react to their earnings results, as that's obviously the most important thing that we watch for, not just obviously looking for setups, but how the reaction, not what the earnings are as such. So one of the leading groups, it's been the leading group since the July breakout. So First Solar, for example, from the Renewable Energy Equipment Group, which is DWCREE on stock charts and the industry groups. So this has been the leading group, but obviously got overtaken this week by the oil groups a bit. It's dropped back down into 4th, as the group itself and the stocks obviously within it that make up the group have been pulling back in early stage 2. Some have failed their stage 2 breakouts and pull back into the ranges again, but the leading stocks in the group, FSLR, ENPH, ARRY, and a few others, I'm still holding up in early stage 2. So on the watch list on Thursday, I covered FSLR, which is potential leader in the group. You can see its relative strength 98.9 still, even following the pullback. You can see the pullback has been fairly shallow by comparison. So if we look at the run up here, we've only pulled back 20% from the stage 2 breakout level there, broke out and ran a good 70% or so. So decent length of pullback at the moment, and this still underneath the 21-day and the 50-day moving average currently, which you can see here. So we need to see this start to pull back up again. But at the moment, looking to earnings on the 27th, which I believe is Thursday for this one. So nothing doing on this until we get those earning results. So be watching this in the after hours on Thursday to see what happens, which way it obviously breaks. Move on to ENPH, the other leading stock from the group for a while. It's rolled back over again. I did highlight on the intraday chart on this one the distributional pattern that was happening within here, and it started to roll back over again and break down. So on a lower time frame, if you drop down onto a smaller time frame on this, you can potentially look to get back in again on the move back into stage 2. So it's in stage 2 on a weekly time frame. So we drop out onto the weekly chart here. You can see the stage 2 breakout week here, broke out into stage 2, has pulled back, but then has rolled back over again, back underneath that 10-week moving average there, and has been below it for 4 weeks now, 5 weeks even. But as I said, if we drop down to the lower time frames intraday, so the 195 minute, which gives you 2 bars a day, for example, you can see the stage 2 breakout bar there, broke up on that strong relative volume. It ran up. We've had this distributional top since, broke down into stage 4 on this time frame and has been pulling down. So at the moment, attempting to form some kind of base structure, hasn't yet started to break back above near-term moving averages on this lower time frame. So if this can broaden out, start to make a stage 1 base on this lower time frame, or you can even drop down to lower time frames than this, the 2 hour, you can see it's starting to move into potential stage 1, the 1 hour already there, 30-minute even more so. So potentially stage 1 on this time frame, for example. So you'd be looking for a stage 2 breakout attempt on strong relative volume on this one. So you'd want to see a really strong volume breakout move, perhaps through to 60-ish on its earnings results. So if we go back to the daily log, you can see it's got earnings on the 25th after the market close. So again, I believe that's Tuesday. So this one we'll be watching on Tuesday on the aftermarket. So to see if which way it breaks, and potentially trying to catch a gap if it starts to move up in the after hours. Another one, ARRY, which has pulled back into the stage 2 breakout level itself. So secondary entry point in the stage analysis method is the pullback to the stage 2 breakout level. So you can see the stage 2 breakout move happened here. So you see the 30-week moving average started to turn up that week. It broke above the head and shoulders basing pattern in here. So you can see it was in stage 4, started to move back above that 30-week moving average, started to show stage 1 characteristics and define this broader pattern as then moving into a base structure that then moved to stage 1. So breakout into stage 2 there. You can see the 10-week moving average was above the 30-week moving average. Both were rising, and importantly, the relative strength was above the zero line on the breakout there strongly, which was also flattening / starting to turn up itself. So you can see here we've got a pullback into the stage 2 breakout level here this week, and then it's managed to rebound. However, still making lower lows on a weekly basis here, and if we drop down onto the daily time frame, it's also making lower lows on the daily time frame. So it pulled back in. So it's right at the point here. This is something that a lot of people ask a lot of the time, is obviously how to get in on the pullback entry point. Is it considered a lower risk entry point? But it's not very clearly defined in the book. Stan only talks about the pullback to the breakout level, and it doesn't give clear guidelines for it. So I came up with a method many years ago of using a multiple time frame approach with this. So similar to what I was showing with ENPH, if you drop down to a lower time frame, I normally start with a 2-hour or a slightly smaller than that, and then you can see we're in a stage 4 decline on the 2-hour chart here. So until this starts to show some signs of moving up either into stage 1 or breaking back up again towards stage 2 type behavior, then obviously at the moment this is still in a pullback, making lower lows. So you'll obviously want to see this start to build some kind of base structure. You might not get much on a lower time frame sometimes, so you might get a move, and then when you get the break back out into stage 2 on this lower time frame, potentially around this area here, so it could take a couple of days in that regard. So this one hasn't got earnings for a while yet, but the other earnings in the group will obviously impact this one. So it might not do this. It might just suddenly gap up with the rest of the stocks, or gap down with the rest of the stocks, depending on how earnings are received. But on this lower time frame here, you can see you can do exactly the same as you would do on a weekly chart, and basically do stage analysis on the lower time frame. So how low you go, like I said, depends on what you want to do. But personally, I always start with the 2-hour. If that doesn't quite fit, we'll look low, even lower down. You go down to the 1-hour, start to see if there's any basing. So you can see it's just moving above the moving averages here, but still in a stage 4 decline on the 1-hour even. And on the 30-minute time frame, you potentially got the first signs of a stage 1 forming. You can see it's been in stage 4 on the 30-minute time frame all the way since early October there. So if this can, even on this lower time frame, you'd be looking for it to start to build a base structure. But obviously go through it. The 4-hour, the 195-minute, 2 bars a day is a good one a lot of the time, especially when it's had a big pullback like this. You can see we've had that stage 2 advance on this time frame, made a stage 3 top, started to break back down again into stage 4 on this time frame. We've been in stage 4 ever since. So we're looking for this at the moment. You've got potential maybe a minor W bottom there, but very small. So looking for this to start to form some kind of base structure, start to chop around. And then potentially you could enter on either the stage 2 breakout on this lower time frame, or you can use Wyckoff entry points. Maybe you get a spring, so you'd be looking for around this kind of area in here if it did. So, but obviously this may not happen. This may just continue grinding lower. You might gap down. So the point is that you wait for that base to form on the lower time frame in order to get in. So it's really important that you wait. You don't want to guess the bottom or just try and catch the low, because this could obviously just, you might think, oh brilliant, I've caught the low here today, like on Friday, as you bought right at the stage 2 breakout level, you like put a limit order in and put it there, but obviously the stock could just continue doing that, just continue going lower. If you look at a lot of the other renewable energy stocks, they've done exactly that. They went straight through their stage 2 breakout level and continued lower back into the base again and failed. So you would immediately just have be straight into a losing trade. So wait on the lower time, use the lower time frames, the intraday time frames, to look for some kind of base to form, and then potentially you can start to play a turn, even if it's only a higher high on a daily candle. So potentially Friday we got that reversal, a little bit of an engulfing type move there. So you look for a higher high on this, at least as a minimum. So as I said, lower time frame is more useful most of the time. All right, let's get back to our group. And so not group, but watch this here. So Wolfspeed, also highlighted this one a bunch of times. It's one of the leading stocks in the semiconductors group. Has fallen off a little bit recently with the pullback. So it's broken back below that stage 2 breakout level into the gap area. Like this was the potentially, I can't remember what the gap was for, whether that was I think it's too soon to have been earnings there. It might have been, but it's been forming a base structure ever since, basically going sideways. So we've got a little bit of potential spring type action in here as it started to reverse back up, but it is a little bit weak in here, still hovering above that 200-day moving average and below these short-term moving averages. You can see 3 attempts there at the 21-day, which hasn't managed to get back above again. So we need to see this one break back above the 110 level there, the 109.42 on the 50-day at the moment. You can see it's got earnings on the 26th, so Wednesday. So again, we'll be watching this one in the aftermarket on Wednesday for a potential start to see which way it's moving, which way it's gapping. If it obviously failure on this would be a failed stage 4, and then that potentially would make that into a short entry if it starts to break, especially if it starts to break back below that 200-day moving average. Obviously a gap above that 50-day moving average, potentially be looking on the long side for that one. So at the moment we're still playing this one as one of the leading stocks on a stage 2, but obviously earnings can change it all. So wait for what they say. ADEA, this one's been coming up. It was one of the stocks that have been tracking for a while, split into 2. So I can't remember what it was, Expa maybe. This was, so split back in early October there, and has had a strong run up ever since, from 6.5 to 11 there. So it's been consolidating here with the volume diminishing on the consolidation there. So it's looking potential for a continuation move, but again, it obviously could pull back quite easily. It's still a long way above that 21-day moving average, so it might shake to the downside before it breaks to the upside again. But at the moment, looking like it wants to make a continuation. Obviously, if the market strengthens, the follow-through day actually does what it's meant to do, and we get continuation higher, then obviously strong stocks like this will continue. But if the follow-through day is yet another dud, I think the 7th of the year, then potentially this could start to pull back in a bit. But it has got a big range here at the moment, so looking to see how this one develops at the moment still. Another one of interest recently is Frog. So this has got earnings coming up on the 2nd of November. So I've been highlighting this one in the watch list a little bit. You can see the basing structure that's been developing. Had a little bit of a inverse head and shoulders type pattern developing, but it started to break out of that a bit. So it started to get a bit more volatile but broaden out the base. So we've got potential stage 1 base developing. This is on the daily time frame. You'll see a lot of charts that look similar to this at the moment. The moving averages are not quite yet in the right order. You can see the 200-day is still above the 21-day and the 50-day moving average. So the 50-day is this blue, the red is the 200-day, and the dotted is the 21-day. So we need to see the 21-day above the 50-day and the 200-day in that order. So at the moment, I highlighted this on Thursday, so on this day again here. So it popped up again on Friday, but supply came in, stopped it from moving any further there. Stage 2 breakout level at the moment is around that 27 points. So if we look at it on the weekly chart, you can see here a bit broader. So if I take that across, see a broader level. So as I said, around the 27 level there, potentially you want to see a strong move through there. You need to see it on more than 2 times the average weekly volume. So we're looking for a big move like so. Did I just say we've got earnings on the second in this one? So potential for a gap up stage 2 breakout attempt. You see this big base structure that's been, as I said, forming some kind of large head and shoulders pattern bottom on this. So we're looking for that stage 2 breakout attempt up through the 27 level, ideally pushing through that 30 level. As on a stage 2 breakout, you want to see a powerful move. So on heavy volume, ideally. Not all stage 2s have heavy volume. It might just creep up. You might only get heavy volume on the day if it's an earnings move, and then more normal volume going forward. But it's not as much of a big requirement in larger stocks as it is in the smaller names. If you don't see it in the smaller names, then they're generally best to avoid. But in the larger stocks, they're obviously, as they're in more ETFs and etc., there it's much less important. So you just want to see a strong price action and all the other things doing what you want to see. 10-week above the 30-week moving average rising. You want to see relative strength line versus the S&P 500 above the zero line. You want to see, obviously, at least average or above average volume, but ideally more than 2 times on the weekly. So you can see this one had a big stage 4 decline, started to break down into stage 4 early after an initial IPO advance and then rolled over. Stage 4 breakdown has been obviously a deep decline since that stage 4 breakdown there. It's dropped off 71% and even further from the high, 82%. So this is a really deep pattern. Could have a lot of overhead resistance, but potentially starting to move into the late stage 1 here. So we're looking for a stage 2 breakout. All right, let's move on. What else we got? Right, the gold. Oh no, let's get out of there. Wix.